Good morning, traders. Welcome to Central Bank Day, coming after Election Day. Just the 4 central banks today, nothing to worry about. Oh, it's been a long week already. It's just at Thursday. 2 more days to go, and then it's the weekend. Looking forward to it. Hope you're doing all right and trading through everything that happened yesterday safely. I can't say the same for my trading yesterday, but I'll get into that shortly. Right, let's get stuck into all the headlines. Chinese state banks have apparently been in selling dollar yuan overnight. That's as dollar China zoomed up to the 721s area. Looks like speed too fast for China there. So we got up to the 721s and they've been in overnight selling it. So get in. I'd like it a bit higher personally, but I don't know if I'm going to get it. But they're in already for that. They've also apparently told, according to sources, so it's not confirmed yet, they've told their banks to lower their interbank deposit rates to help give a boost to the economy. Over in Japan, we've had the wafflers out, the new FX diplomat Mimura, saying that they're closely watching market moves with the highest sense of urgency. They're seeing one-sided sudden FX moves currently and will monitor market speculative moves and will take the appropriate actions against excessive moves. So you still remember we've got an election coming up over there as well. But the eyeballs are still on what the yen is doing. We had a bit of data out from Japan as well. Labour cash earnings, which came in at 2.8%, if I recall, before I scroll down there. Where is it? There we go. Overall wage income for September, 2.8%. So it was expected to go to 3%, but it came in unchanged, even though the prior was revised down. Still healthy numbers, but they'd like to see that much higher, of course. Over at the RBNZ, and this has been a bit of a theme today with a lot of central banks, a lot of countries all commenting on Trump and what's expected. So Deputy Governor Hawkesby kicked off saying domestic challenges remain and then unemployment is expected to rise further. So that's an indication they'll keep their finger on the cut button. Then he said that Trump's economic policies are expected to be very much manageable for global central banks. So taking a bit of a wider view. Then we had RBA's Bullock up, saying it's too early to judge the implication of the US election and tariffs. And we need to watch what happens globally and respond as needed. The Riksbank, they said, or they cut their policy rate as expected by 50 pips to 2.75%. Forward guidance largely unchanged, saying they may cut again in December and during the first half of 2025, pretty much in line with what they said in September. Norges Bank, they held rates at 4.5% again, as expected. They said, again, the policy rate will most likely be kept at 4.5% to the end of 2024, and then they'll look to begin cuts from Q1 2025, again, following their current guidance. So no real change for those guys. Over in Germany, we had a bit of data out as well. We had a bit of data out from Europe as well. Well, I might as well start with Sweden there. CPI data for October, preliminary numbers coming in at 1.6%, pretty much unchanged on last month. They look at this funny rate, constant interest rate, CPIF it's called. That was a little bit hotter at 1.5%. On the trade front in Germany, they saw imports up and exports down, so obviously a worse trade balance. Industrial production came in sucky, down minus 2.5%, was only expected to come in down 1.1%. Year on year, as you can see, the number looking awful there. French non-farm payrolls quarterly down 0.1% from a prior flat. Industrial production in Spain as well came in at 0.6% year on year. So again, still data over there that's looking pretty good. We did get some minor PMIs for construction, which are all still looking a bit sucky, although they were the odd improvement amid that lot. Retail sales in Eurozone came in, well, better than expected. 0.5% versus 0.4% expected, year on year 2.9 versus 1.3% expected. But there was a bit of a major revision in those. Year on year number, the month on month number revised from 0.8 to 1.1%. 0.2 to 1.1%, so a big revision there. And also the year on year number was revised from 0.8 to 2.4%. So I don't know, maybe they were doing a job share with StatsCan for those revisions, but they were a bit wild on that front. Going back to Germany, and it's all blowing up over there in the political landscape. There's talk about German elections, snap German elections coming in the early part of next year. March has been touted. It may happen in January. We don't know yet. It's all kicking off there at the moment. A lot of it is around them not being able to close off the budget shortfall. There was a strange going on yesterday. German Finance Minister Lindner apparently proposed early elections to coalition parties as a solution to this government crisis, according to the Bild newspaper. And then not long after that, Chancellor Scholz apparently sacked him. So it's all going wrong over there. And this is pretty much blown up, or it's come to a head. It's been bubbling for a while, but it's come to a head now. Scholz says he will hold a confidence vote in mid-January, which could trigger new elections by March. So that's going to be some New Year's cheer for Germany. I'm a bit surprised the Euro isn't taking much more note of this, particularly as we're still in the US election orbit. German government coalition is a much more left-leaning government. And obviously we've seen a switch in the US, and we've seen a switch in a lot of other Eurozone countries from more left-leaning positions to centre and the right. So this could be Germany's Trump moment, if you like. But it's a bit of a mess over there with coalitions and whatnot. So that's just a story to keep an eye on going into next year. They've got a weak economy and they've got a political mess going on over there. ECB's De Guindos says inflation is going in the right direction. Growth is weak without recovery in consumption. The ECB is becoming more confident about meeting its 2% target. He also says that December projections won't be very different from September. Now, he is in the know with these things. When he was Spanish economy minister, he was very good at coming out before Spanish data and giving the heads up. So you can take his word for that. What that line does do, it takes a lot of volatility out of the December meeting for the ECB. Not that there was any huge expectations anyway, but it looks like it's going to be another dull affair. He also tapped on the US elections by saying December is too soon to consider any tariff impact. ECB's Villeroy was sticking his nose in a bit further to the US election, saying Trump's administration will likely lead to a higher deficit. The election also brings a risk of potentially higher inflation in the US. And that the US election also means a European remobilization is needed. So they are all panicking about the Trump election and what it means. And for my opinion, I think a lot of the press is going that way. Central banks are just mentioned are going that way. Governments are going that way, all talking about tariffs and what he's going to do and what it's going to be. And to be honest, I think they're all getting a little bit too panicky, which is exactly what Trump wants. If you recall from his last presidency, one thing we know about Trump, he likes to get a deal. And so all this threat of tariffs and whatnot is having the exact effect he wants, which is getting everyone panicking about it. which will bring them to the table, and then likely we'll get some sort of deals cobbled together, like the renegotiation of the USMCA, which is Mexico and Canada and the others. So I think the press, government, central banks are all very fearful of this tariff situation, but the actual outcome may not be as they fear if Trump pushes them into deals. So from a market perspective, we're probably going to be seeing this expectation for tariffs, and it's going to hit hard and it's going to bring inflation, but the reality is probably going to be somewhat less than the market will fear, and that's what I'll be looking for, at least over the months ahead, until we know what's going on. We're still very much in the early days. While we're still in the Eurozone, Goldman Sachs have cut their growth forecasts for the Eurozone for 2025. They now see growth of 0.8% versus 1.1%. Also getting in on the US election, and the reasons for that cut is potential tariff risks after Trump's re-election. They also now see the ECB deposit rate, the terminal deposit rate of 1.75% versus 2% by July 2025. Over in the US yesterday, we did have the NBA data, not that anyone's paying attention to that right now, but I'm keeping an eye on it, particularly for the mortgage rate, which went up to 6.81%. So still thoughts that rates may not be coming down as fast in the US if Trump gets involved. Again, that's another theme that's running through the press and whatnot. So there's been a little bit of a tick up there. Obviously, this is the week before the election, but the expectation was still there anyway. Bank of Canada's Rogers says Canada is not near the limit of divergence with Fed policy, confirming what they've been saying for quite some time now. Back to the US election, and some of the banks are changing their Fed forecasts, as I just mentioned. People thinking there's going to be less cuts from the Fed. Nomura says that a Trump victory means fewer Fed cuts. We now expect just one Fed cut in 2025, with policy on hold until the realised inflation shock from tariffs has passed. JP Morgan has also changed their 2025 Fed call. They now see only quarterly cuts from March. That's about it on the headline front. As far as things goes, we still trading through the reaction, shall we say, from the election. Now, I hope you've all stayed safe over that. I was saying yesterday on the Flow Show, we need to wait and see what happens over the US session when the Yanks come in. And we started seeing that towards the end of the show, and it really kicked into gear when the Yanks came in. So we've seen some sizable moves. Moves that look like they might have been breaking in certain directions, but they've found tops and bottoms and the like. Euro dollar got down to the 107. It was mooching around the 107 after the election and during the morning yesterday, as you'll remember, but it broke when the US really sat down at their desks. I did try long into the level. I got spooked out on this move under with all the volatility, so I did have my stop under this 106.70 level, but I decided to get out manually, and that proved to be a bad decision, but such is life. What's happened now is we have moved back above the 107 level, but we just can't get through this 107, 60, 70 area, much like we couldn't after the initial reaction and after that move through 107. So this is your pivot point at the moment. If we can't get above and hold above, then there's no point thinking about going to 108 or anywhere else for that matter. And while we stay below that area, it does keep these downside areas in play. So for today, we just need to be seeing what's going to happen here. Obviously, we've got the Fed coming up later on, which I expect to be a bit of a dull affair. I don't expect them to move from the path, so I still think they'll cut 25. It'll be a shock if they don't, and if they don't, what they spin that as, be it the data or potentially the election, but I don't think they're going to move on the election at all. The Fed, they're going to be under pressure. Power's going to be under pressure. Obviously, with Trump winning, they're not best buddies. He's going to get lots of questions probably about the election, unless he's had a word in the ears of all the reporters to say, don't even bother. I'm not going to talk about politics, but otherwise he will get lots of questions. So he's going to have a big broom ready to brush all those questions away, because he's not going to get into political questioning. At most, he'll pay lip service, say something like they're prepared to work with whoever's in government. Their job is to steer the economy as best they see fit. So he's probably going to do this his usual, walk the fine line, give reasons why there's risks, give reasons why there's positives, give reasons why they're going to continue cutting, give reasons why they may stop cutting or go pausing, play both sides of the coin. But I think he would like to have a quick and fast presser, get over this one and kick everything to December so he gets out of this election orbit. So I'm not expecting anything big from here. The only change we do have, or potential risk we do have, is because we've got the market now thinking less Fed cuts. He might want to push back against that sort of narrative. So that really is only the big news I can see coming here. You know, as mentioned, we've got two banks thinking less Fed cuts. There'll be more. So he may want to push back against that, because otherwise conditions will tighten artificially without them doing anything. If the whole of the market expects less cuts to come, I don't think he wants that to happen. So we might get a pushback in that area. Anyway, that's euro dollar done. You know what to look for here at the moment. If we do get another test of 107 and it holds, I might give that another go, because that'll be a likely confirmation. If we get that sort of confirmation, then maybe that will be the springboard to take us a bit higher, maybe get up to 108 or even through it. Let's have a look. Dollar yen, I've not really done much with dollar yen. It's a bit all over the shop. One thing that was surprising yesterday, we had a big drop in volatility in dollar yen. It's been sailing 11, 12%, 13% for the last few months. It's now down at 10.66%. The high has been 11.06%. So there's been a big drop in volatility since the election. So maybe there was a large amount of election noise in there. Who knows? But I'll keep an eye on those vols now, because I was expecting that vols to come down much sooner than they have. But that's markets for you. So a lot of volatility has dropped out of that. It should mean the lower vol comes down in dollar yen. It should mean we won't get as many or as bigger moves and swings over things like data and headlines. But obviously we're in Trump world now, so a tweet from the big man and we might get big moves anyway. So vol is coming down. Technically, we haven't really had a look at 155 yet. Bit of jaw boning out of Japan, probably just woke the market up to the fact they're still watching. So I would still be interested in having a little big figure test short of 155, more from a scalp perspective initially, and then maybe see if I can keep some on to see where it goes from there. This 153.40 level is going to be interesting if we get down there. If we hold that, it keeps this whole move going back below there, then we might start to see a bit more of a firmer top being formed up here. So that's my two areas to watch: 155 above, 153.40 below. I might as well just keep going down the list, because everyone likes to look at things. So cable, it had a little mooch under this double bottom here, not far, a bit like the euro, a little bit of an extension. Got back above it pretty quickly, and you know, I said yesterday where my level was 129.45.50, and look where we got to. 129.47 is the high today. So we're not out the woods yet. Decent move, but obviously again a lot of volatility in there yesterday. But here we are. can't get through the higher level. So you know where your markers are now. We've had this low, we've stepped up against this level. We might be stepping up again against this level here, 128.90, 95. Hold that there, then maybe it gives us again the springboard to get up and go through 129.50. If we get above there, we're probably going to be up to test 130, 130 and a half as well. Obviously, we've got the Bank of England today, expected to cut 25. The vote pattern is expected to come in at 8-1 for that cut. I'm in two minds whether it's an 8-1 or a 7-2, maybe even a 6-3. If it's less than an 8-1, then obviously it's not looking as dovish. But I don't think it matters a huge amount. It could even be a 9-0. The person who's likely to vote against a cut is Catherine Mann. Elizabeth Mann. Oh, I can't remember. There was two Manns, wasn't there? Is it Elizabeth or Catherine? Can't remember. Anyway, Mann. She's the big hawk, so she's likely to vote for unchanged. She could be joined by Peel as the other one because he was less dovish than Bailey was the other week when Bailey issued his comments about being more aggressive and activist on cuts. Peel wasn't as dovish as that. So it could be a 8-1, could be a 7-2. As I said, it might even be a 9-0 because even Mann might think, yes, we need at least a cut now and maybe a pause. So it's got every possibility, you know, toss a coin, a three-sided coin, if you like. Overall, I think they're going to cut 25. And again, there's political noise around the Bank of England, obviously, after the budget last week. Again, Bailey probably won't get into talking direct politics, but he might make mention of the fact that UK yields are going higher. At least that might put pressure on monetary policy if they are forced to keep an eye on borrowing costs. As you can see, yields are still well up since the budget. So that's pretty much what Bailey could go into. I think what we're more concerned about is how they see rates going forward. It's a monetary policy report meeting, so updated forecasts, and we get a presser. So we're going to hear from Bailey. He's going to get questioned and whatnot. He'll also get questioned on the budget and the US election too, no doubt. But really, it's the forecasts where the BOE see rates going into 2025, how fast they might consider cutting, the reasons why they might increase cutting or even stay on pause. So that's going to be the risk from here. For the quid, I don't know if you're going to get a huge reaction in cable, but yeah, it's just going to be one. If you get some of these levels tested and they hold over the BOE, then it's going to give you something to lean on. I might have missed this one in Euro Sterling this morning, not awake in time. I was looking yesterday to maybe have a little dabble down into the 83s. We got down to 83.08 this morning. Before I woke up, I wasn't prepared to leave any orders in, so might have missed this one. Might get an opportunity over the BOE, but I'll have to see what the reason is why we're bet down here again. But I have been warning this week that if the dollar has a big move over the election, then you need to watch your Euro Sterling trades because of that speed difference between cable and the euro. What else? Who's asking about dollar CAD main king? Couldn't get a break again. People are looking at this 39.50 level. It's a bit of a level that we've had before. Obviously, we had this spike high back in August, but we've had a couple of mooches above it, but we can't get and stay above it, which is a bit concerning. So we're having this pullback. Look where we pulled back to this morning. This move, obviously, under this 38, 66, 70 area was all election led, so volatility and whatnot. But the day after, now this is where the levels might become a bit more trustworthy. And for the moment, we're bouncing off that level. So again, that keeps this momentum going that we've seen, since late September. We're not out the woods yet, not even close to getting near a 38.2 fib, hence why It's not on my chart just yet because I was putting it on and kept having to redraw it higher, so I've just left it off. So it's maintaining, but it's struggling up here now. So again, you know, your top side area, 39.50, you know, your downside area, one of them anyway, 38.60, 70. Okay, so those are the levels you've got to be looking at from here. Still waiting. Everyone's waiting for a test of 140. So it's going to be a big level if we get up there, given the momentum that we've been building here. So it could mean that a break of 140 is going to be pretty explosive because, as I've shown previously, it opens up the door to some of these high old levels going back to 2000s, even the 90s. And then we've got this big, huge double top up here in the 146s. So this is going to be a big deal if we get to 140. But for now, if we can't go over 139.50, we're not going to 140. So you know your levels to play with on that one. What are you up to today, Ali? You're watching a level in euro yen. Short in 165.65. 165.65. Well, what have you got there, mate? You got these, you lean on these moving averages or something? Because this looks a bit in the middle of what's going on here. If I have to pick the levels, I'll be looking around that sort of area. 165s. And then call it that, 166. Let's just call it 166, shall we? Give or take. So you're bang in the middle of this range at the moment, mate, which wouldn't be my ideal trade, but that's me. That's not you. You've got your own reasonings, no doubt. What have you, so what are you leaning on against there? What tickers you got in there? Just the moving averages. What's going on in there? I've got 55, bang in the middle there as well. Where's that at? 61. Let's have a look at the daily. Then you got a bit of moving action, but that's further below. The moving averages. Okay, mate. Good luck with that one. As I say, wouldn't particularly be my flavour trading right in the middle of this range. But you're your own man. You know what you're doing by now. So I hope you make many pips on the back of that one, mate. What's going on elsewhere? Let's look at dollar MEX, because this one's looking a bit sorry for itself after the move here. And I've been talking in the chat room. I got in some longs yesterday, starting at 727. I've bought down to 710 at 2027. I bought down to 2010, but it's looking a bit dodgy at the moment. I think I just jumped in too early. I got caught up in the excitement of yesterday. You know what might happen to some of these pairs. You see a big pullback, and you think, "Oh, yeah, I'm going to go with the flow and trade what we know was happening in the MEX previously." But I think I probably should have stayed on my hands yesterday. For this one, I'm in that mood. I don't know what to do with it now. I've got my stop at 1980, just under this 1990 level. So I had to have a stop in somewhere. So yeah, I don't know if I see a half decent rally, I might just get out if I get some profit. I did have a little slice yesterday when we bounced to 2031, but no, then I did back lower down. So we're in a bit of a limbo around here, as you can see. These former highs, this bit of a zone that we've got going on here. Let's go into a little bit wider. Oh, I have to go wider than that. Damn mix. So this is a traffic zone that goes back quite a way. So 1990 is a bit of a level for me. I know Gavin and some other roomies got some other levels down below, but yeah, I think whatever happens here, this is looking like a bit of a pivot area. If we're going to keep going up, we need to get back into 720s, and then that will give it a bit of a springboard, perhaps, to move up at least towards those prior highs. Nothing's broken yet. Excuse me, nothing's broken yet, because we've still got this uptrend going on, although it's obviously fairly wild at times. But I think if we're getting below 1990, then again we could see a bit more washout from this trade, and maybe we head lower. And as I said at the start of the show, the market is expecting the worst in terms of tariffs. So your pairs like the MEX, Canada, China, that sort of thing, Euro even, the market's still thinking it's going to be bad for those countries and thus those currencies. But if that's not going to be the case, then you could see these currencies strengthening. But it's a timing thing. You know, at the moment, I'm just trying to trade the reaction here. I'm not trading what's going to be happening in 6 months, 8 months' time. You know, but I'm going to be building that possibility into my longer term trading in terms of what might actually happen with tariffs and negotiations and whatnot. So anyway, this is just a short term trade. I'm trying to catch a knife, basically. It's not looking too good, and I'll see what happens for the rest of the day. What else? Yeah, anyone else joined Truth Social yesterday, Trump's social media channel? Because we are hopefully going back to that, where Trump tweets something before he decides to put it out on a speech or something like that, because he was very market moving when he was last in. I've only joined it yesterday because I had no interest in it until he became president. We did have a little bit of fun yesterday, seeing whether he posted on Truth Social first or if he posts on Twitter first. I checked his last tweets and they both went up at the same time. So unfortunately, they don't give us the seconds of when the posts go up, so we can't see where he posted first. And you may laugh, but it's an important thing to watch. If he posts 30 seconds on before, if he posts on Truth Social 30 seconds before he posts on Twitter, then you're going to be needing to watch Truth Social. Yeah, Brad, I'm not interested in the platform in terms of, you know, what the themes are, what the sentiment is. It's purely trading. You know, as I said, Trump tweeting when he was last president was market moving. So you need to factor that in to your trading going forward. And if he posts on Truth Social first, then that's the one you need to be looking at. Okay, so that's purely why I'm doing it. Yeah, you can profit from it quickly because obviously him posting now there's going to be a lag between that and when it goes up on the main wires. So it's going to give opportunity for headline trading, as our colleague in the chat room, James, says. You know, headline trading, it's become a bit of an art form recently compared to the old days, but Trump sort of swung it back to the old days when he was president, where everyone's on a level playing field in terms of when they get those sort of market moving headlines. Yes, he can, mate. He can move currencies. He can move all assets in a single post. If he puts up a tweet saying his own, you know, he could put up a tweet now, wake up and go, I'm only going to put tariffs up 20% on Mexico. Boom, you're going to see dollar MEX probably trading sub 19 in a flash. So yes, it's going to be very important watching social media if he chooses to put policy out on Twitter before putting it out on press releases and the like. But we'll see. We'll see. Maybe he's changed his ways. We don't know. But you've got to adjust with the conditions, and that's a big thing with Trump. The unknown is the big known from Trump. Goldie, Derej. So I was thinking about this one yesterday. I was getting a little bit of an itch maybe to try along at 27, then maybe to try along at 26.85, then maybe try along at 70. And after I mucked up my euro, I decided to leave gold alone. It was probably a wise choice because we've carved through the levels. Again, you know, we were looking at this yesterday. We were down here, or we were just up here somewhere in the 30s, and we already had the confirmation at 00. So that was the level to watch. But then the US came in and we smacked that, and we smacked that. We did hit the 38.2 fib, though I'm probably cheating. I should probably have moved that up there, in which case we went through the 38.2 fib. What is significant, though, fib aside is that we're now banging our head on the 28, 68, 70 area. Okay, so it was nothing on the way down. We even, turned around it a few times at level, but then straight after we had the move down, then we find in resistance, resistance, resistance. So this is pretty much decision level for gold. Does it hold here and this level becomes a tough nut again? Then it's going to mean this up move is going to face a potential pullback, and potentially a bigger pullback than it's seen for quite some time. As you can see, even a bigger move than that move. So this is quite a significant move that we're seeing at the moment. This fib is only short term, only goes back to September. So I'm not going to rely on it too much. The bigger move from down here. Again, I haven't got the fib on because the fib for that's probably around here, 2,500 or something. So I don't need it on my chart yet. But the shorter term, or this phase of the move, we've got the 50 fib or the 50 retracement down at 26.30. But this is your level, 27, 26.70. Okay, if we get above that, then we need to see what happens here. If we get above this and this pretty easily, then probably buyers are going to get a bit more confidence and we're probably going to start mooching back higher. So I may look to get in this. I got stopped out the balance of my longs from 26.30s on the break under here. So I'm out of my position at the moment. But yeah, I might have a little nibble again if we get back above this 26.70. At least you've got a level to lean on. And if you've been short from up here, this is the point at which you don't want it to get back up above. So if you've been short, if you haven't taken any profit down in this move, then maybe you need to think about maybe a little bit of profit taking here in case it does break up. But otherwise, leave the rest on. And if it holds here, then we're probably going to be heading lower. And we need to see where the next support coming in is. But yeah, above here, we need to clean out that one. If it does it pretty easily, then we're probably going back up towards at least 27, 20s, 30s, 40s area. So that's the one you keep an eye on now. Bonds, quick looky. They did go on to make fresh highs in yields yesterday, and we're not pulling back too far. So we're not out the woods. Again, this is a reflection in part on what the market's thinking about, higher fiscal spending. He's going to need to borrow more. It's going to be a fiscal problems, and that's going to test investors' appetite for US debt, all that sort of thing, ramping up spending, ramping up the deficit, all that sort of stuff. That's a negative potentially for the economy and for investors' appetites, okay? Because it means increased spending, increased borrowing, puts pressure on, more pressure. And so investors are going to want more of a premium to lend the US money. That's why you see yields going up. So this is a bit of a fear trade, again, based on tariffs and whatnot. So I still feel this is potentially going too far, but I'm not yet ready to fight it at the moment. But while this continues, we're going to see the dollar remaining firm. Although yesterday it did get a bit messy. There was a bit of a breakdown in correlation between yields and something like dollar yen. And I'm putting that purely down to the fact that a lot of the market was just running around trying to guess what's next and what's coming and what's going to happen. So it's probably going to take a couple more sessions before we settle down into something a bit more normal. We move back to trading the fundamentals. So just be careful that we could see similar moves today. And I get the feeling today the market is in what's next, what do we do now mode. And if the market's thinking that, then we've got no clue what it's going to do. So caution still going forward with your trading. Yes, the tech is probably going to come into it a bit more. You can probably rely on it a bit more than you could do over the last day or so. But trade the conditions accordingly. I'm not looking to step up trade sizes or anything like that, or do any big risk trades. I might have a little scalps here and there, get the sniper rifle out, but I'm not looking to, try and make my year in a couple of days after a US election. What else? We'll have a quick look at oil. So we know the range in oil. We had another little look up towards this zone up here, this support and resistance zone. Couldn't get through it a second time. Another pullback. We keep sort of pivoting around the 70 level, bouncing off it. If we get back under, then we're heading back down here. So again, a market that's in a bit of indecision mode here. Fairly tight range. You got a bit of a $5 range to play with, and you either trade the range or you go with the breaks. If you get a break down here, it could be a bit of a washout because we've been down there quite often without really getting through it significantly, at least for any length of time. So if we do get a break down here, then maybe we're heading to the low 60s. And back above this zone, then we're probably heading up towards the 80s again. So plenty of ways to trade this one. Right, let's have a quick look at your comments. No, I didn't try the gold long yesterday, Ali. As I said, I was looking at it. I was tempted to have a nibble at the same time as when I got in euro dollar, but I took the path of sensibility. I sat on my hands, which was a good move because it went through the levels, as I said, carved through. Marcus, afternoon, the Fed, yeah. It'd be interesting to see whether the Fed brings any moves, particularly in yields. It will perhaps show a sign that things are normalizing this afternoon after the Fed. But as I don't expect a lot from the Fed, I don't expect it to be market moving. I think the election noise is going to overwhelm it. But it will wane. Probably next week it will wane a bit more because he's not yet in the hot seat. Not until, fully in until January. So, we've probably got time to tread water for a bit until we start getting a proper idea of what he's going to be up to. But as far as the Fed goes, yeah, I'm not expecting much this afternoon, mate. Copper, I know a lot of people are watching this one. I know Blake's watching this one, as am I. Again, reactive move below this support here. Now we're back above. This was a level I was looking at earlier this week for a potential long. It was on one of my trade-off topics with Mr. Brown this week, but obviously not while we're writing on the election day. If we do find a bit of support here at the 430-32 area, then I think we may be having another move here because this move wasn't Trump, as far as I'm concerned. This move was more on seeing slightly better data coming out of China, slightly better manufacturing data coming out of other countries as well. So just a little bit of hopium perhaps coming in to the copper market, more stimulus from China, etc. So forget the election, wipe the election out, and then we'll see the market trading more fundamentally from now on. So yeah, I don't know. I might have a little nibble in this. I don't want to put too many eggs in the same type of basket. Gold, copper, that sort of thing. When they've all moved in the same direction. But I'm not going to sit on my hands forever, I can tell you that. Ali, Swissy. What do I think of the Swiss fundamentals? Obviously, the S&B are in, and they can be in both sides, and they're always whinging about the currency. But if you take a long-term view, they've intervened, they've put caps on, they've cut rates, they've gone negative rates, they've done everything in the toolbook, and still they can't get the Swissy in a position that they like. So it doesn't really matter what they do. It does in terms of everyday trading, like if they start intervening again one side or the other, then it matters. But for the longer term, it doesn't matter what they do. The currency is going to do what it wants to do anyway. This is a decent move up to the 87s. Again, a lot of dollar behind this as well. So the question is going to be, can it last? It's keeping the trend going from this. Next level for me is up at this 88.20 area. So if we do manage to hold above this level, at least 87.60s, then we're going to get a test into the 88s and then see what happens there. I know a lot of people have been long this and waiting a long time for this to produce the goods. So hopefully it's going the right way for you guys. Right, I think that's it. Unless there's anything else, have a quick look through your comments. Nope, I think we've covered quite a bit this morning. Yeah, and as I say, I hope we steered you okay yesterday through all that noise that we got, and expect a bit more to come for the rest, probably for the rest of the week. Don't forget to catch us on F.A.C.E later with Blake, Dale, and the rest of the squad to get their latest views on things and whatnot. So I will see you all then. Have a great day, everybody. Trade safe through the BOE and the Fed, and we'll look at it all tomorrow. Have a good one.